We have a special guest we're bringing on to talk further about it, Rod Alzmann. So before we do that, let's give him the special treatment that he deserves. Here we go. All right, Luke, good dance. There is Rod Alzmann. How are you, my man?
Hey, Luke. Hey, Jason. Doing pretty well. How are you guys doing?
Good. Long time no talk. We miss you, man. We miss you. How you been? How's life? How's life in the fast lane these days?
Life's been pretty crazy. I'm not going to lie.
I'm sure. You probably have like a butler now and stuff like that.
Oh, man, I wish.
Let me ask you this. Did you think there was a chance that you were going to be asked to testify at Congress? I thought your name might get thrown into there.
You know, who knows? I mean, it's kind of crazy they even had Keith down to testify. There's no reason in my book why he would be involved in the matter. I get maybe the media fervor about the Wall Street Bets angle and them finding him as the easiest person to single out. So I get it, but it's funny. I think in hindsight, when I watched that live, like he did the best job of anybody on the panel of just being, a human being who conveyed his message in a manner that was clear and easy to understand, as opposed to, thank you for that question over and over and over.
All right, let me ask you one more question, and then we'll move on to where we are today. But was your favorite part of the whole congressional hearing I am not a cat? Because that was absolutely mine.
My favorite part was I like the stock.
Okay, there we go. That was a good one too.
Yeah, that was good. I thought, Luke, they may have called us in because we were the room where they were all discussing this thing. So glad no one bothered us on that one. So what do you think about this latest GameStop stuff?
Whew. I mean, today in particular, and I've been following, I had the feed on in the background. I think is it up to 5 halts now? So, I mean, today's obviously
6.
especially.
We just hit 6. Yep.
Jesus. Yeah, the last month and a half or so has been pretty nuts. I mean, there have been movements by the company, and we keep kind of tracking everything on our gmedd.com site. So we've been kind of following as they came out with the earnings announcement date just yesterday. But prior to that, the day prior, they'd come out with this transformation committee that Cohen, Atal, and Wolf are going to be on. They had announced the hiring of the chief technology officer and the 2 other senior leadership members. So they've made movements in the direction that we talked about in January. So the truification keeps happening. Clearly the prices front ran it to a large extent. So yeah, it's pretty incredible what's been happening.
I made progress on Ryan Cohen. So someone I know well, their kids go to school together. Ryan's
okay.
And their kid. I was in Florida in Miami, and that's where Ryan lives. It was right across the lake, I guess, where I don't know what you call it. It wasn't a lake. It was like
it wasn't the ocean. Let's just clarify. It wasn't the ocean.
It wasn't across the ocean. It was like one of those things, those inlets or whatever.
The intracoastal waterway.
Yeah, something like that.
Rod's a lot smarter than we are, Jason.
Yeah.
I also lived in Miami for a few years, so.
You're also smarter.
I was there for a couple of weeks. That was my extent. So yeah, I mean, the stock did run on that announcement. Went to 300, 320, and then some other stocks followed suit. I mean, do you trade some of these other stocks?
No, look, I think I told you guys I'm not really too much of a trader so much, but yeah, I was following that too. Some of the other meme stocks, what is it? KOSS is one of them. I saw that the movements are very closely tied to one another. So I guess I think that there are big hedge funds involved in this that are playing games too. I mean, it's pretty obvious that retail doesn't have the coordination or the firepower to have caused all of this on their own, especially with what happened in January. Obviously, this recent stuff threw me for a loop. I mean, if you want to talk about Roaring Kitty posted after he was at Congress, he said, I like the stock. And then he bought 50,000 shares at, you could back into the average. It was in the high 38s and change. So he pretty much caught the bottom. I have no idea what his current position is or if he's trimmed at all. But a lot of these folks are, saying crazy price targets. So some of them don't plan on selling. And then it just becomes, who else is selling? Is there any incremental selling pressure from new shorts that want to enter? I mean, I think a lot of them are probably still a little spooked after what happened last time around. But what I've been doing, I can't really justify buying. We laid out the bull case in the high 100s, but I can't really justify buying at these levels if until I have more information. Like I mentioned, there have been the movements in the right direction with the incremental hirings, the shifts in the new committee for capital allocation. So these are all good things, but I mean the price at 250-ish represents a forward price to sales of around 3, which isn't on its face crazy.
Yeah,
but
it seems in line. That's actually below S&P average.
Yeah, I mean, it's just what's your risk reward, right? Like what's the upside from here and what's the downside from here? And I do think it's difficult to consider entering at these levels. But what I've been doing for the last month and a half, I just continued to write cash secured puts. And unfortunately, I didn't get any assignment. I had some $40 strikes that almost got assigned that week that Roaring Kitty bought under 40, but it closed at like $40.60. So unfortunately, I have no shares right now. But I have, incredibly generated more premium in the last month and a half, 2 months, realized more premium, like 2 or 3 times my initial GameStop investment. So it's kind of absurd. And the IV is insane again today. I've been writing more puts today.
So what month will you write those for?
I have been writing a lot of short dated puts to kind of play this. I've written a lot of 319 and 326 to play around this, but today I was writing some more with the IV pump. Like I just wrote some January 22 $50 strikes. I wrote some July 40.
What are you collecting for that?
So let me go to my order status because I have.
You're writing them way out. That's interesting.
So I wrote, 20 $40 strikes for April 16th at just under $3. I wrote 10 at 50 for January 22 at $17. So like a lot of these break evens are still in like the high 30s, 40s area. I feel very comfortable acquiring in that area, but
so let me just slow it down for a second, Rod. So basically what Rod's doing is he's getting what I like to call synthetically long the stock by selling puts. And he's doing the $40 strike in April and then the 50 strikes, it sounds like, all the way out into 2022.
Yeah. So, right. Like I am at risk. It's like I have, I don't want to call it locked in because there is always, you can always close out of the position. But right now with the implied volatility at such high levels, like looking out that far, you're close to like 300%. It's higher than 300% on the really close in stuff. So even though these are way out of the money, the value of the options is pretty high. So like me writing it means I'm on hook to buy at that strike, but it's really that strike less the premium. So that would be my break even. And I see it as, if you don't want to, chase this price and you maybe feel more confident in a entry point, I think cash secured puts when implied volatility is through the roof is a really smart play.
Awesome. I like it.
Look, it is another play. Like there's a couple stocks that I have limit orders on that are like 15% below where they're trading at right now. Instead of doing that, I could sell puts to end up owning the shares. Is another way to think about it, right?
Exactly.
With the market through the first 2 months of the year when the market was just straight up, I was checking through my portfolio. I made more money selling puts than any of the stock that I owned, which is sort of nuts.
Yeah, I mean, to the point Jason just made, I think that's probably the best example. Like if there's a stock you are highly interested in, you want to buy it at a certain price level, and instead of you just sitting there waiting with your cash in hand, not doing anything with that limit order open, you can write the put, which means you're on the hook to buy if it closes below that strike price. But if it closes above it, at least you generated some income off of waiting to find a nice entry. So
yeah, I
think it's a simple strategy that it doesn't, it has the same risk profile as going long the stock. It's not as though you're taking on any crazy risk when you're writing cash secured puts.
Yeah, I really haven't done that way, and I'm going to do some of that with some of these ones that I have limit orders on.
Yeah. And so Rod, I've got two things that I want to touch on. So one is you said, it's pretty clear that hedge funds are somehow involved or big money is somehow involved in there. I'm curious, like what gives you that indication? What do you see? How can we see it, etc.?
I just don't know how you could claim that all of this volume, it's just the dollar figure to me jumps out as being too high to just be retail. I mean, I could be wrong. It's certainly speculating, so I don't have any good way to quantify that for you.
Okay, no, that's fine. And then the other item I wanted to talk about, let me throw my screen back up on here. All right, so we got this press release earlier. Let's see, it's March 8th. So yeah, earlier this week, basically about the committee, talking about the chief technology officer, the e-commerce lead, etc. I'd love to get your thoughts on what this means. How are you interpreting this, etc.?
Yeah, it's a little interesting the way they went about it, because they announced that they had already formed this committee and that the committee had already taken these steps, which was just interesting. It wasn't like they announced the committee and then did work. They had already done the work, which we saw. What was it? It was earlier in the month, or it was in February. I'm losing track of time. I think what it tells me is that the grip on power has certainly shifted in the direction of the Chewy team, in the direction of the largest shareholder, Ryan Cohen. That's my interpretation. With the CFO leaving in pursuit of a more e-commerce transformation kind of capable executive, clearly, having a CFO who had been this. And I'm not knocking Bell. I mean, there were some issues, I think, with some of the things he did tactically over the 2 years, a little less than 2 years he was CFO. But he wasn't necessarily the one best suited as, former PF Chang's CFO, a retail-centric CFO. Clearly, the direction that they're signaling with the hiring of a chief technology officer and these other announcements is that they're really accelerating the shift away from this legacy business, which, to the point I made earlier, like if you're going to get a 3x price to sales, you need a different model than just a transactional retailer like a Best Buy or whatever. So clearly there's some things that we should expect to see in line with them leveraging their customer relationships better. Like they've got the 20+ million active PowerUp Rewards users within the last year. So are there different sorts of subscription models where they can leverage their procurement power through the publishers, the OEs, to maybe offer GameStop exclusive digital content? Obviously, there are GameStop exclusive like physical content when they release new games and new products physically. But I think leveraging subscriptions is something that we should expect to see coming from them, because that'll justify a higher multiple.
Okay. Yeah, absolutely agreed. And then I imagine that some of those themes are what you're going to be looking forward to in that earnings release that's coming out. And especially the thing that I'm going to be most interested in, that the whole world is going to be tuned into, is that conference call.
Yeah, the last one was really disappointing, and so much has happened since that third quarter conference call. The price, reacted poorly after the call, and I think we've heard a lot of conversation from Kramer and others talking about how they should have issued shares already, and then there was reporting by Reuters about why they didn't in late January, because the quarter had just ended and they would have had to pre-release earnings and the timing was kind of an issue. But clearly the fact that they haven't opted to do any sort of a pre-release here, even with the recent price action, I think if you read between the lines,
and we did just halt again, really quick heads up for everybody. But yeah, I know. Was that 6 or 7? I think we've halted twice since only once since you've been on. Okay. But all right, keep going.
But yeah, I forget if we talked about it when I was on in January, but they had done in the third quarter this shelf offering, $100 million at the money or at the market, and they didn't tap any of that. And I know that there was speculated that there was disagreement within the board because of people not signing that document. There were a few board members who didn't sign off on it. Obviously, since then, we then got the settlement with the new board members added. 4 board members will leave come the annual meeting. So like right now it's sitting at 13, it's going to go down to 9, and it's going to be 3 of those 9 are Chewy people, and 2 of them are Hestia Permit, appointees from the prior fight. So do you think that the 2 appointees, who I believe both of them did not sign the shelf, I would think they're probably more in line with shareholders, more in line with the Chewy vision. So it may be that the writing is on the wall that maybe Chewy has an explicit majority at this point. Again, there's some speculation there. I don't know the ins and outs of the GameStop board. I definitely await what they're going to say in the fourth quarter, because the third quarter was so lackluster that's what led me and my kind of cohort to write the letter to Chewy, to Ryan. We wrote the letter to him on behalf of 4% of shares outstanding, saying that we encourage the direction that you laid out in this November letter. We want to see the company move in this more digital oriented direction. And lo and behold, then we got that settlement in January, and it was off to the races within days.
Yeah, no kidding. I mean, it's been a wild ride, and you just mentioned, all this craziness that's happened with the stock has happened between the last 2 conference calls. I mean, it's sort of nuts, right? Doesn't it seem like this has been going on forever? But
yes,
we check this
it's taken years off my life.
Yeah, I can imagine. I mean, I'm like tired from covering it every day for 2 months. All right, but our last report was 12/8.
Yes.
And the stock went crazy on, when was that? It was late January, early January is when it got going.
Pull the 3-month chart, and if you put log on, it should be
here's 3 months right here.
Yeah, but put on the log function, because
I can't.
Okay, but if you look back in December, 8th was the earnings call, right? So I recorded a podcast, as a matter of fact, on December 14th when the price closed at $12.72, and just kind of laying out the story to help people understand. And I've gotten a lot of good feedback for folks who aren't familiar with GameStop, that I encourage you to check out that pod, because I tried to chronicle the events from like 2013, 14, when they tried to have this failed expansion away from their core video game business, and they acquired a lot of like AT&T retail, cell phone retailers. So I laid out how they kind of realized that was a mistake. They had this big strategic review that led to the hiring of Sherman in 2019, yada, 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 COVID, Cohen, et cetera, kind of bringing us up to speed with some of that history. I encourage folks to check that out. But the price really, if you go to January, you see the 13th, I think you see that big jump, which I mean, not big on your graphic, but it's big in reality.
Here,
because
look at that. Now it's
on
big.
January, that Monday morning, January 11th, we had the announcement pre-market that the settlement happened. And that was where the 3 Chewy, former Chewy folks, Cohen and Co., were added to the board. We didn't know if there was going to be like a proxy fight like there was the prior year with Hestia Permit. So when that got cleared up, it took 2 days, but you saw the huge spike on the 13th, on that Wednesday.
And I bet
my
you were
understanding
freaking out when
from
that
talking
happened.
to a variety of folks is that Sophos Capital had been one of the larger shorts. They had like an 8 million share cover that day, which kind of was the first domino to fall and kind of set things in motion. And we all know how much money Melvin and Co. lost amid the squeeze. So the weird thing to me, though, is that there isn't as much short interest anymore. Like there wasn't, 100% short interest in March to fuel this most recent jump, where we went from 40-ish to 90 in one afternoon, and then continued running. The next day it went up to like 185 or so, and then it kind of built out a little cup, maybe cup and handle, who knows? I'm not a technical guy that much, but yeah, this recent price action is really hard to wrap my head around. I think I've felt the FOMO, so I'm sure if I'm feeling FOMO, others are feeling FOMO, and a lot of retail folks who may not even know all like the fundamentals or care about the fundamental stuff probably have been jumping in trying to chase the rocket ship to the moon. But look, I could see a justification for a fair market value up here or higher, dependent on the path laid out. So you have to think that market participants are either placing a huge probability of success on a reinvented GameStop that's more digital first, They've changed the About Us page on the company's website within the last couple of days. So like clearly there's stuff going on behind the scenes in addition to those personnel changes that I was noting, that I think you have to argue there's euphoria going on, but that said, I could see a fundamental justification for it if they are able to execute this kind of strategic transformation. The question is,
like you said, it's only trading at 3 times sale.
Are you going to say that they can execute the transformation? And if you give it 100%, then maybe you think it should be worth $400+ dollars, but you should discount that. And I can't see and justify, like with this margin of safety, I find it hard to enter up here. I'm going to keep writing my CSPs. I did write some yesterday at the 100 and 125 strikes for the 19th, I think it is. So my appetite for entering at higher levels has been rising, but again, there's no guarantees in the market, and clearly this could very easily retrace back. I don't believe we're going to see the 40s again, personally, at this point.
And let me ask you one more question, Rod, and then I'll let you run. But for that earnings call that we have, and that's on the 23rd, correct? So it's less than 2 weeks. We're coming up to it, all right. But less than 2 weeks away. What's if you had to name one thing that's most important for you to see or hear from that earnings call, what would it be?
Yeah, the most important thing I think for me and for other investors who folks entering right now are clearly expecting it is a clear, laid out, articulated pathway to transform from where they are today to where we believe they should be going, with fewer stores, fewer physical stores, alternate means of generating revenue that's higher margin, that's going to justify a higher multiple, things like that. So clearly this digital transformation, we need to see it articulated in a believable manner, how they're going to get there and what it's going to look like in the future. Because otherwise big funds aren't going to be willing to throw money behind it. And I think you're going to see just a lot of this noise as retail keeps kind of churning the FOMO. And obviously we got stimmy dollars coming soon, so who knows what's going to happen.
Awesome. Well, Rod, thank you very much for joining us, especially on such a chaotic day today. We're just sitting here watching the thing get halted, and you're actually able to shine some light into the stock. That's how we like to do it for Zinger Nation out there. Try to cut through the noise, get the story going. Guys, the website is gmedd.com. I'm going to spam that link in the chat like I always spam links in the chat. You'll see it 5 or 6 times there. So there you go. Rod, thanks a ton for coming on with us. Good luck with your cash secured puts, and we will talk to you soon.
Thanks, guys.